So really what I wanted to go over today was candlestick structure, because some people probably don't understand that. There's different types of candles, standard, there's gravestone, dragonfly, blah, blah, blah. Honestly, guys, I don't know every name of every candle. I mean, I know of them, but I don't look at a chart and be like, oh my God, that's a morning star candle. Like, I don't do that. The goal really is to let you know what the candle is telling you, more or less, right? And we'll go over that. So I'm just going to get started for that on the candle structure. And also too, I went over support and resistance last week. I'm going to bring that back up because that's super important for people to understand. And the goal for these calls is to kind of make it foundational for everyone to understand the process behind technical analysis. Technical analysis is just the study of what is happening on charts, right? So when we're looking at these charts, we're seeing these patterns resonate, these candles doing different things, and all these concepts combine into what technical analysis is, right? So I'm just going to get started. So a candlestick, right? So there's different types of charts. There's Renko candles. There's forget the other name. We have like crap, Brett. What's the name of the other candlestick thing? The other chart type with the open, high, low, close. Those bars. What's that called again? All the bars. You have like those Renko bars. You have those, all that stuff. So the traditional chart is going to have candlesticks, right? And every candlestick on the chart is telling you a story. So pretty much this right here, right? Can everyone see this okay? I could try to zoom in a little bit too. Like this is obviously a bullish candle. That's a bearish candle. It's red, one's green, right? This is the body of a candle, right? This is also the body of a candle. Candles have wicks. You have a high here, this wick. This is a wick here. This is a wick here. This is a wick here, right? So these are two components of a candle, the body and you have the wick, right? And for a bullish candle, you have the candle opens here and the closes here. For a bearish candle, the open is here, the close is here. So that means the end of the move of the candle, the price of the candle will be noted by down here, right? And the same for the bullish candle. At the close of the candle, the price would be up here, right? So you have your wicks and you have the body of the candle. So I'm going to stop on this presentation for 1 second. I'm going to flip back to an actual chart so you can see what this looks like on a real screen.
So basically the body of the candle is the difference from the open to the close price of the stock. And then your wicks, the top wick and the bottom wick, are your extreme high points and extreme low points of the day.
Exactly.
So now when you have a day where the wicks are high and low, and then you have a little base, that means that the close from the open to close, that the stock hasn't moved as much. That means that there's a lot of indirection on the stock. That means that buyers and sellers are going back and forth fighting for who takes momentum of the stock.
You're getting ahead of the lesson, bro. We got a slide for the doji. Now I'm playing with you, but
okay,
no, you're good. That's exactly the point. Like the wicks, like so. Brett, are you on your desktop? Can you see my screen?
I'm walking in my house now. Just give me a couple minutes.
Oh no, you're good. You're good. So what Brett was talking about, right, guys? So from what I was showing you, this is a daily chart of NQ, which is the Nasdaq 100. We went over this before. This is the futures index, so it has very liquid chart. It's literally between this and S&P 500, the largest exchanges that you could trade on. So when you're looking at a chart, right, depending on the time frame, every candle is telling you what's happening in that time frame, right? So this is a daily chart. These are all represent one day. This is tomorrow's candle. This is futures, but this is yesterday's candle. This is Monday's candle. This is Friday's candle, and so on, right? If we go to a 1 hour chart, these are on a 1 hour basis, right? So we'll go back to the daily chart. So what we're talking about with the wicks is like, really, there's going to be different types of candles. There's gravestone, there's hammer, all that stuff. The main thing to notice is who has intent, right? And who is, there's only two scenarios you really care about, or two players in a market you care about. You have buyers and sellers, bears and bulls, whatever you want to call it, right? And that generally notes to you who's controlling a move, right? So even though these last few days we've been super bearish, selling off, and Brett and I were talking about a bounce happening, if you're looking at this candle here, like this lower wick here is showing you that buyers are in control here, right? You have these long lower wicks. These are buyers pushing this up, right? Same here. Buyers are pushing this up. Buyers are pushing it up. This one here, the upper wick, it's a bearish candle. that's sellers, right? So that means the market tried to open up to this price here, right? This is the high of the day, right? The market tried to open up to this price here, and then it came back down and closed all the way down here. So the market tried to get to this price at some point, but ended up closing all the way down here. So that's showing bears were in control there, right?
And you can see at the bottom, you see how the candles shrink. That means the sellers are getting exhausted.
Exactly. So when you, and the smaller body of the candle, exactly. Mm-hmm.
Yeah, so
no, go ahead, Brett.
I think something important to note is that there's many different time frames on candle charts as well.
Yes.
So when you're doing my type of trading, small caps, I look at 1 minute or 5 minute candles, where someone like Jay or Brett might look at, something on a monthly or weekly chart. But essentially, each candle within that time frame represents a battle between bears and bulls. So a green candle will mean in that time frame that bulls won. That means the price went higher from the previous candle, where the red candle would represent that bears are in control. So basically think of candlesticks as a war between bears and bulls. And in that moment, whether it's 1 minute or 5 minute time frame or weekly, monthly, whatever it is, based on the action from the prior candle, if it's green or red, that means who's in control of that price action in the particular time frame.
Just to kind of trick to show you too. Just what Billy's saying too, just like if I don't know who else is trading on TradingView, that last slide show like open, high, low, close. You don't have to go and figure it out yourself if you're on TradingView. If you hover this right over here, you see the top left of my screen, this spot here, open, high, low, close, right? So that's all that. So like this, like I said before, the open of this candle is at 23,119. So that's down here, right? It opened here. The high of this candle is this upper wick here at, what's this, 23,975. That's the high of this candle. The low of this candle is at 23,880, and the close is up here, right? So that's all it's saying is that like we opened up here. At one point, the price went as low as here, but buyers took control and pushed it back up to close up here, right? So kind of what Billy was saying too is like you obviously there's different time frames you're using for trading. So right now I'm on a daily chart. If I go to an hourly chart, the only difference is happening on a 1 hour time frame. The candles are still telling a story, right, of what's happening here. Like this huge move we just had on futures. You see, this is a hammer candle. You see bears got crushed here. You see the bullish lower wick here.
Hammer candles, those are momentum candles. So that's driving all the momentum. When you see those big candles, that means one side is taking all the charge on momentum.
You probably see,
as you see, like those green candles, all the buyers are taking. What do you say?
No, I said you see even better on a 5 minute time frame. The hammer candle here, like this is like a huge lower wick. So that means price at one point when this candle was forming itself, it could have let, and that's why it's important to let candles close too, right? And it happens on a time frame. So on a 5 minute chart, this candle will take 5 minutes to close, right? 10-minute chart, 10 minutes to close, blah, blah, blah. So on a daily chart, obviously it'll take a full day for that candle to close. But if you're on a 5 minute chart and you're seeing this candle happen in real time, this candle might have looked bearish at one point and came down here, right? But buyers were obviously here, and you see that lower wick. That's why you let a candle close for confirmation. So when Billy's saying stuff like on Billy, what was that AXAI that you traded today? Which one was that? Which one?
AIXI.
Yeah.
This is it? The one that went crazy today? No, that's the wrong name.
No, AIXI.
Oh, AIXI.
Yeah, and this one I'm going to go over in depth on Thursday. I recommend. We'll go through my whole thought process from basically start of this move to from yesterday to the move today, how to play it exactly, and just my thought process on like candlestick movement, support and resistance, everything along those lines. So definitely sit in on that.
But to my point too, it's like, okay, like this is a red candle here. And honestly, on small caps, you're not going to have as clean a candles as you would on NVIDIA or an Apple or the NASDAQ because there's lower volume, there's more manipulation, right? But there's still intent behind these candles. Like I'll show you guys what the different types of candles are, what they mean. The main thing is to know that a long lower wick pointing up is showing that buyers are attempting, right? And then a long upper wick going down is showing that sellers are in control. So it's like you have resistance here, right? You see every time we come to this level here, boom, we get rejected. You see bears are here, there's sellers here, long lower wick, right? Long upper wick. And then you come back here to the resistance or the support here, sorry. You have a long lower wick here where we're bouncing off of that level, right? So obviously this chart is not super liquid, so the candles are a little messy. But just wanted to kind of put that into practice.
So guys, yeah, make sure you're using support and resistance levels and not basing your trades just on candlesticks. I please emphasize that.
Brett, great point. Yep. That's so. This is like I said before, guys. This is one part. Everything we're going to go over is part of a system on learning how to perform technical analysis. So it's not like, oh crap, I could draw lines on a chart. I know how to trade now, or I know how to read a chart. No, you don't. Not yet. Like everything is kind of like a building block on how you get to that point of understanding how to read charts. I'm going to take a quick pause there because I know I kind of just blabbled for a bit. Anyone have any questions on how to read a candlestick, what a candlestick is, what it means, anything about what we just covered? Any questions? Now's your time to ask. Don't be scared. There's no wrong questions. There's no bad questions. The point is to ask questions.
Yeah, I got a question.
Yeah.
I almost hate asking it like this, but if there was one thing that we should take away from this quick conversation you just had, like what is that? Is it the fight between the bears and the bulls, or is it just the fundamental understanding of, hey, this is what it is on a very high level?
I would say you analyze your resistance and support lines, and then you look for these long wicks. The wicks are telling you.
Brett, hold on. Yeah, so now I'll say, hold on 1 second. I'll just say, just for the support resistance thing, I have a whole nother thing for that too. I think you mean just from like reading a candlestick. Is that what you're asking, Dave?
Yeah, that's what I was just asking.
Okay.
Just from the last 5 minutes. Yeah.
All right, my bad, Brett. Go ahead.
The wicks are what's showing you the rejections and the failed moves. So the wicks are very important when you're getting to, like, say if you're coming to a resistance level and you see a long wick, like Jay said, that's a win-win situation to put a short in, because you got your resistance level coming up and then you got a long wick showing that buyers couldn't break through and sellers took command, So this is not the only thing that you grasp to learn how to trade, but this is definitely an important thing to watch when you're analyzing, candlesticks and support and resistance levels. Obviously everyone knows green and red, buyers, green, red is sellers taking charge. The body, there's only so much you can see with the body. The body is really showing where the price difference is coming. If you have a big body green candle, that's where all the momentum's in the bull's favor. So it's really telling you the price action of a stock in one candle. It's showing you a lot.
I would say, Dave, to answer your question, also in addition to what Brett said, I would look at it this way, right? The market is telling a story always. Every day, the market's telling a story. It may be that the story is bearish, maybe the story is bullish, maybe the story is sideways, right? So in that story, there's two players in that story. There's bears and bulls, right? And how that story resonates on a chart is through candlesticks, right? So on every time frame, these candlesticks mean something. So say for you, you more likely buy shares. So more so, this story means something to you on a daily time frame. Apple, great example, right? So not knowing this is a hammer candle, not knowing this is a shooting star or whatever you want to call this candle. Let's look at this is today's candle, right? On Apple. This long lower wick, I think part of the story it's telling, all you need to know is that buyers were in control today, right? This is a long lower wick, buyers were in control. So this could be the start of a reversal move potentially off this level, right? So I think that's the story you need to know. Like the market's telling a story every day, and these candles tell part of that story. So for this one, buyers are in control today. It could be the start of a longer move.
Sorry, Jay. That wick that Jay is showing right there is the sellers drove the price all the way down, but they couldn't close the day with the action of that stock. The buyers came in and defended that zone. That's showing a clear bottoming candle right there, to me at least. Obviously, I don't make my trade off of that, but that's one indicator that I would take into play, when I'm looking for reversals. Trend reversals are huge with candlesticks. So
that's telling you pretty much, Dave, that trend reversal, meaning like obviously this is a downtrend here, right? We hit a point where we came to some support here, right? There's a long lower wick on this daily candle. It's showing you that buyers are stepping in here and trying to take price back over, potentially reverse it. But guess what? We don't know the other part of the story yet because this only happened today. What if Trump says, you know what, fuck Iran tomorrow, I'm sending this shit back down, you know? So that's
Right,
also
and that's
unusual
only
confirmation.
one time frame. You know, you could look at different
Exactly.
time frames, and there'll be different candles.
Yeah, so don't base it off of one candle, but use it as part of your toolbox to have an understanding of what's happening here. Dave, does that answer your question as a takeaway?
Yeah, thank you. That actually does help a lot.
Okay, gotcha. Anyone else have any other questions about how to read candlesticks or what candlesticks are? And again, there's other stuff I'll show you guys right now, like in this little presentation we have here.
I didn't catch the part about the wicks. If you could just touch on that one more
Yeah,
time.
of course. I'm gonna go back to this real quick for you, Randall, first. So, here, this is kind of just in layman's terms here. So the wick, you have two parts to in a candle, right? You have the body of the candle here, right? And then you have the wick. You have a high wick and a low wick. Not every candle will have both parts of it, but I think the key is to know that a lower wick is showing that bulls are pushing price up, right? The upper wick is showing that bears are pushing price down, right? So, but the wick's giving you the high and the low of the candle as well. Does that make sense?
Yeah, got that.
Okay, got you. Anyone else?
So guys, a big body and a small wick, that means there's a strong move, clear control by one side, buyers or sellers. And then if you have a small body with big wicks, that's an indecision. That's where there's a fight between the buyers and sellers.
Yeah.
Once you get it baked into your mind, you'll have it set for life.
Like Brett was just saying, the indecision candle. Brett, good point you hit off on that. And so like this is a small body candle right here, right? So like if you're looking at this candle, like I said, the market's telling a story, right? So remember Brett said a big body candle shows that buyers or sellers are potentially in control. The body of this candle is so small, and the upper wick is equal to the lower wick. Who's in control here? No one. It's an indecision candle. That's why it's called an indecision candle, right? So you'll generally see these candles in between a bigger move taking place. But when you have a candle like that, it's generally saying that there's no one won the battle. Price is in agreement. We're kind of in a basing period, you know. Also, one thing I just want to call out, Brett, I don't know if you know like the names of these by heart. I don't, and honestly, I don't care to ever learn the names of these by heart.
Dude, there's so many.
Yeah, there's so many candlesticks. There's hundreds. There's hundreds. The main thing, like I was saying the day before, and Brett said too, is that you understand what's happening. So, okay, you see a long upper wick, gravestone doji. You don't need to even see that to say that's a bearish candle. You see a red candle with a long upper wick, that's bearish, you know?
I mean, gravestone, definitely gravestone is a great, I mean, if you see that candle, it's most likely the top.
Exactly. And I'll show you guys some examples on charts of how you find these and the moves that resulted after them too. Because one thing we have to be careful of knowing is that these candles are like reversal candles potentially, but they aren't confirmed until the move happens after. What that means is like, say, for example, the candle I showed Dave today on Apple, you don't know what's going to happen next until tomorrow happens, right? So you can make a move maybe in anticipation that something could take place, but there's no confirmation until that next move happens. Does that make sense, guys?
I think just to add in here, the way you're going to understand this and really learn this is through just staring at a screen, watching the price action every day, trading and putting the time into it. Like the guy said, I don't understand the exact names of these. I couldn't tell you what the exact, because there's a million different patterns, right? But in my plays particularly, when there's a massive body within that candle and a strong small cap move, what happens is on the upside, right? Shorts are getting caught and people start panicking when that 1 minute or 5 minute candle is so massive. Like something could jump from like, and you've seen how quick my stocks can move, guys. Something could jump from like 40 cents to 50 cents in like 1 minute. That range from 40 to 50 is the body of the candle. And what happens is people start getting afraid, shorts start covering, like, wow, like what just happened here? Like you saw at AIXI today, that went from like $1.50 to like 270 super quick. And the bodies of those candles, which we're going to review on Thursday, were massive. There was like that was like a textbook short squeeze. So we're going to go over that Thursday. We're going to go over like supports and resistance with this candlestick action. We're going to combine all the lessons that we're teaching from last class and today, and kind of try to put it all together to do like a thorough analysis.
Yep, great points, Billy. I'm gonna go to this next one here. So this kind of goes on what I was saying before, guys, right? Because you really don't know, like this hammer candle by itself. Okay, it's a hammer candle, but there's no bullish confirmation until the follow through moves happen after, right? So this is kind of just a repeat of what we were talking about, just to show you what you want to see. You see these moves generally in between there being a reversal, right? So say, Brett, you were talking about a hammer candle before, like say the market wants to put in a low. Let's go to a regular chart. I'm gonna look at let's go to
Shit,
SPY.
you go look at anything right now.
Yeah, but no, I want to go to SPY particularly from the tariffs.
Oh yeah.
Like that's a beautiful example of what was that, April last year? Oh, that's such a gross chart though. Actually, when was one of the
So that guy again, the guys, the hammer candles, the long bottom wick with the small body on top. So that means the sellers pushed down the price and the buyers came back and brought it back
Actually,
up.
SPY has a really good hammer candle today that could be an example of a reversal, really.
Dude, everything, bro. I'm telling you, everything has a hammer
Yeah.
candle right now.
Yeah.
Jay, open up SPY, put your cursor over one of these candles. I know on the Thinkorswim platform, you're able to see when you hover over a candle, you're able to see the high, the low, the open, and
Yeah.
the close of a candle.
So
I
over
think
here you
that's
can see
important
it
to show
right
these
here.
guys.
So that's the top. I don't know if everyone can see the top left of my screen there. So you see like what I was saying before, the open is 656.65. That was today's opening price of this candle, which is here, right? Your high is going to be the top of this wick here. Let me zoom in so you can really see. The high is going to be the top of this wick right here. So that was 659.61. Like it literally says it right there on the very top left of my screen. It might be, can I put this somewhere else to see it? I don't think I could. Okay, we'll keep it there for now. But when you hover over a candle, I don't know who uses TradingView or Thinkorswim, you'll see these details as well, right? And it like Billy said too, it comes with repetition. The more times you look at it, you don't even need to look at hover over this candle to find it out. Maybe if you want to make your levels more crisp, you could do that. But yeah, so you see the low of this candle. So anyone who was trading today, let's go to a 1 hour time frame, right? The market looked pretty bearish into the open. Let's go even lower. Like where we Tuesday, the market like had a little pop earlier in the day, sold off, came back down, and then after hours here, that news came out. We see a huge wick off of this level here. Our daily candle shaped out to be a pretty good hammer candle, and now we don't know that this is going to have follow through until tomorrow's action happens, right? So that's kind of what the point of that presentation was saying. Like, let me show it back again. Yeah, so you don't know. The biggest thing with the market always is confirmation, right? So confirmation comes in different forms and generally on different time frames. So what I mean by that is say you're trading a small cap with Billy, right? And you're on a 5-minute chart or a 1-minute chart and you're looking for confirmation. Say, I don't know, a stock breaks over $1, it breaks out of $1, it comes back and retests it, but you don't let the candle close, you just buy it as it's touching it. You're setting yourself up for failure. Wait for confirmation. Confirmation on candles is wait for a candle close. And it depends what time frame you're trading on. I said this last week too. If you're on a daily chart, you cannot trade Billy stocks on a daily chart. You would lose all your money, and you can't trade on an hourly chart either. But you could look at it maybe for an hourly for a trend to find support and resistance and things of that nature. But as far as looking for confirmation, especially for your entry, you want to be on lower time frames. So especially with Billy's plays, you're probably going to be on a 5 or 1 minute, to find that entry. And again, confirmation means the candle closes, not like the candle looks like it's about to close. It closes definitively, and then you have your confirmation from there. Either it holds that level you're looking to buy at, or it breaks down and doesn't hold that level. So that usually, like, say right here, right? You get the hammer, say back test your key level, confirmation, hammer candle, boom. You could clearly see bulls are in control here. That's your confirmation that you could go long after this, I'm going to stop here again, though. And anyone have any questions on that?
Just to also like add in when I say confirmation, yes, I like to wait for like that current 1-minute candle to close above that like key resistance or above like that key support level. But I also like to give it another minute or two as well, because I was actually going live with the some of the guys in here this afternoon on AIXI, and we were talking about the current price action that it was $2.70. Jay, you were on that too.
Yeah.
So what happened was the stock hit 270, came back down a little bit, probably touched like that moving average line, retested 270, right? Went 1 cent higher than the high of the day and dropped to $2. So if you were trying to chase that breakout on a 1 cent difference there, right? You would have got begged and lost like 20% in minutes. So I really like to give it like a couple minutes. I know a lot of people have asked, just to make sure that that price action starting to move away from that resistance level, which is now a support. But again, I'll go like super detailed Thursday about it. I don't want to like hijack this, but
No,
I think
Billy,
it's
that's a good point
important
you brought
to,
up because people are going to
there's a
apply
lot of
this
fake
to their
outs in the
trades.
market. This market, and two, people put stop losses at like exact support levels. The professionals out there are just going to raid your stops. They're going to take your money. They'll take it down a few cents and then they're going to run it up. That's called a liquidity trap, right? So, you just have to like wait for that confirmation, whether it's on holding a support level, breaking a resistance level, and play accordingly from there. So give it like more than just that 1 minute on my plays. Give it like a couple minutes.
Yeah, use a 5-minute candle instead of a 1 minute. Use a 5-minute chart if you want to do that. Like to confirm the 5-minute candle closes. Instead of your 1 minute waiting for 5 1-minute candles, let your 5-minute candle close, or even do a 3-minute. I like 3-minute chart too. So like just give it a confirmation. And 1-minute candle is not confirmation. I think Billy is your main point, right? Because if you're going off a 1-minute candle for your confirmation on almost any stock, what's happening on a 1-minute chart that's really gonna give you real confirmation,
Yeah, and these moves happen so fast, but you don't want to like let FOMO, like fear of missing out, dictate your move. You need to wait absolutely for that confirmation, because guess what? If your resistance level fails to break and there's a fake out, you're going to get trapped in that stock. It'll like viciously move down to the prior support level and you'll be down. You could be down like a quick 10%. On my plays, they move very quick, but as you guys have seen, if you play them right, you can make, sky's the limit on them, honestly. So just be patient. This is the game of like timing and patience. It's the game of waiting for like key levels to hold, key levels to break, but also with that confirmation as well, making sure that that price action indeed is going to make either that next move up or next move down. And that's what these candlesticks are really. And again, we'll go into further detail, but these candlesticks really tell a story, and they really control the overall move of a play. Like AIXI today, the bodies of those candles were massive when it started halting up around, I don't even know what time it was, like 12 or 1 o'clock. The days are a blur when you're trading the market all day and looking at this stuff. But yeah, I think it was 12:30. You went from $1.50 to 270 in like a few minutes. You had potential to like double your gains in that like 5-minute period.
For sure.
So
really
yeah,
quick,
it's
Billy,
all
sorry. I
time.
want to let anyone ask any questions on the slide before I go. Anyone have any questions on this? Just as far as, and also too, notice how like Billy, you kind of alluded to this too, like the names here. Cool. I know what a hammer candle is, but I don't study candlestick names. My point, guys. Like Billy is saying too, these things are telling a story. The importance that you understand the story that's being told, not the name of the candle, because no one's. I mean, there's people who do know these things, but I don't think it's any benefit to just study every name of these candles. You gain nothing from that. But let me shut up for a second. Anyone have any questions on this?
All right, I got a little silly question here just to
No,
make sure
no
I can
silly
wrap my head
questions.
around
No
it.
silly questions.
All right, so obviously the candlesticks themselves, it's in the time increments, right?
Correct.
Like from the time increment slot, whatever you're selecting. Now, would it be weird to think of like the candlesticks as almost like a weight slider, and you're looking along the weight slider, whether like how thick it is along the line, or no? Like the strength of the buy or sell off at that point?
No, I mean, okay, weight slider. I don't know what you mean by weight slider, but no, as far as strength of the candle, yeah, I agree. That makes sense because, like, say, all right, let me give you an example, and I'm gonna kind of combine. Hopefully, I don't confuse anyone. I'm gonna combine a concept I use called supply and demand to this, right? So, whenever you have a long lower wick like this and a full body candle like this, that's a very strong candle, right?
Yep.
That's a strong candle. So that's your point. Is that the question you're asking? So if that's what you're asking, yes, like a full body candle, like Brett was mentioning before, shows a strong candle. This is a strong bullish candle, right? Now, this could be a strong candle too, but it's not nearly as strong as this candle here, right? Like if this, so for me personally, I like supply and demand zones. This could be a demand zone right here, right? If this came back and tested the zone, it could have held, but look, it cut right through, right? But now say this zone right here that's forming up, this is a strong zone because look how strong this candle is that moved out of this zone, a full body candle. They showed that buyers controlled price here for a full hour. For a full hour, they literally closed it damn near to the peak of the high of the candle, right? So I think that was a good way to put it for your analogy for you to understand that, right? Whereas say like this candle here, this is a full body red candle. You don't really, this is a bearish candle. Even this one, this is kind of like a reversal move is happening on this here, right? Because you just have a small body here. But like you see, like this is kind of what we were talking about, like the hanging man, these indecision candles are kind of like the turning points.
Yeah.
And then right after that, that's the bearish engulfing candle. So that's when a big red candle, eats that green candle up. You see the big red after the green.
Yeah.
That shows all the change of momentum. It's a shift in control.
Yeah,
so
and it's a straight bearish candle. Straight bearish candle, So sorry, was that Carl who had asked that, Carl?
Yeah.
No, so does that help answer your question?
Yeah, 100%. Yep.
Okay. Does anyone else have any questions too? I just want to give people time for questions before we jump to anything else. Justin, I see you.
Yeah. Hey, Jay, this is Justin. Before this, I just thought that red was bad, green was good. But looking at how you broke it down, I can see how red candles can be bullish because it tells the story about how
it could set up a reversal, exactly. And for me in particular,
totally, dude. Yep.
I won't go into this. So I'll say this for another lesson. So when you see those nice little zones on my chart, this is just a 4-hour demand zone here in a 4-hour time frame. This is a red candle here. Sure, if you're like just trading the candle, maybe like you're thinking, red candle here, but no, look, we came back here. You have a basing candle which shows indecision, and the confirmation was to move up after. So now you have 4-hour demand here, and like you said, Justin, this is a red candle, but the candle itself may look bearish, but it's showing a period of indecision. So let me go backtrack really quick. The period of indecision is showing that buyers and sellers are in agreement on price, meaning that price didn't go anywhere. Did price really go anywhere here? No, like it stayed within the range of this candle. So that means who controls this move next is which way the move resolves, right? So if this move came back down here and was bearish after, you know that bears were looking to make a move here, right? But they weren't. So this is a red candle here, like you said, but clearly buyers had intent here. They're basing out the move. And we kind of talked about this last week too. You have to understand with these indecision candles, it's not people like me, Brett, Billy, or anyone in the chat combined moving the market. It's huge institutions, BlackRock, JP Morgan, whoever they are, they're moving the market. And when they wanted to get into a position, say JP Morgan wanted to buy shares of SPY today, right? They're not going to buy 100 million shares of SPY at 655. They're going to stack orders here, right? And that's when you get the choppy moves and the price action in the zone where nothing's happening. Boom, boom. There's a battle going on here, right? Between buyers and sellers. And you have institutions like JP Morgan, BlackRock leveraging into these positions with limit orders, which are pretty much, you see accumulation happening here, right? And your confirmation's on the breakout. Buyers won this. Bulls got crushed. So Justin, to your point, that red candle, like sure, it's red, but it doesn't mean that things are going down. This is like a basing candle or an indecision candle. You see prices sideways in this range, and then the move after confirms who had control of it. So that was a good call out, Justin. Anyone else have questions?
Yeah, just to explain. So that's kind of what I meant with whatever you just explained with the weight slider. You remember the old school weight sliders when you go to the doctor's office? That's what it just reminds me of at first glance,
100%. That's a good analogy. I never thought of that one. That's a very good analogy. You maybe tap into like a old school memory for that.
No problem, brother.
Randall.
So basically what you're saying is even though it's on like that little patch right there, even though there's 3 red candlesticks, that's just somebody trying to leverage control in order to drive it back up to make their money off of the increase rather than like just the overall negative.
Essentially correct. Yeah. So basically I'll look at it this way. So when you see a candle that's a basing candle like this, an indecision candle where you have just a high upper wick and a long lower wick, right? That's in the small body of the candle, like Brett was saying, or one of these. These are indecision points here, right, in the market. So like this one here, this is an indecision point. Indecision point, indecision point. What confirms the move though is the move after it, right? So like you had just explained back. Yep, the move after.
Candle.
Yep, exactly. So this creates a level of demand here. I'll do a full lesson on supply and demand, but it's important to understand what's happening in the candlestick itself. So it's not just like Brendel, like you had said, like the institutions aren't just going to buy 100 million shares at this price. They're going to drive the price right up. They're not going to win anything on that. They want to leverage into position, fake people out. And then you have this kind of imbalance where you have buyers versus sellers, and they're in a period of agreement, quote unquote, meaning that price didn't move anywhere. It's inside this range, right? Brendel, does that help?
Yeah, it definitely did.
Okay, gotcha. Anyone else have any questions on some of the candlestick stuff? Great questions, by the way, guys. There's no stupid questions. I like you guys asking questions because that helps you guys understand things. So anyone else have any questions on these?
Yeah, if no one has any questions, I think too, it's important. What I like to base a lot of my moves on, I don't like those, Jay, you lost your chart.
No, I stopped sharing. I'm going back to another screen.
Damn, you just fucked up my thought. I'm just
kidding. My bad.
Yeah, so like when there's a small body to a candle, it's very difficult to like determine price action because there's not a lot of range. Whether that's like a consolidation period, or I really like using those like large body candles, especially coupled with like volume, which we'll get into in like a different class, to really dictate the move. So if you like hover over that zone that you kind of drew out, Jay. Yeah, right there, right? So that red candle right there. So it hit what it's saying. That bottom wick hit a price of like 651. And what happened was off that 651 price, the bulls actually drove that price up and closed at like 654. I'm going based on like rough numbers too.
Yeah, no,
like
you're right. It's
based
right
on what I can see from my iPhone screen because accurate, I'm in my car. So that huge bullish engulfing candle basically overtook that previous candle, right? So the sellers were in control, but to close that candle, the bulls actually took control, right? So the bears took it down to 651, then the bulls closed it at 654. And what happens on the next candle, right? You basically start pushing upwards. The bulls start gaining control. You're starting to see prices that were higher than the previous body of the previous candle. That's like a momentum play right there. So the bulls start taking over, and then the next candle at, I think that is 4 o'clock. Mm-hmm. You see that, the bears took one last try to push it lower. I think you switched.
You can see even more in that. No, I put on an hourly chart just so you can see it even more that they came like on a 4 hour. You won't see this battle happening as well on a 4 hour. It looks a little cleaner. So when you're caught in the lower time frames, like Billy's saying, especially for his plays, when you're caught in the lower time frames, you're getting a lot of chop. And that chop's going to resolve into a candle that looks like this, but the bigger move is coming from those chop periods, So like,
and then talk about chop. Did we go over inside bar candles or no?
No, that I didn't. Hold on.
So inside bar candle, I don't know. Can you find one on the chart? I see one.
I think
right
I
there.
have one in the slide. I think. Hold on, let me see. I have bearish engulfing, bullish engulfing, spinning top. I don't know what the hell a Marabuzo is.
So inside bar candle, you see it a lot on consolidation areas.
I'll go back to that chart for you, Brett.
So the high and low is within the previous candle's range. So you got a candle within a candle. It usually signals a loss of a momentum on the trend. So usually, if you have a bullish trend with a red inside bar, you could tell the buyers are losing strength. And, when you see that, that's definitely a possibility of a trend reversal. When you see that, it sets up a good, either way, you're going to get a big breakout usually after those inside bar candles. So you're going to get a move right after those candles. Most of the time, 90% of the time.
Yeah. Yeah, and I think to Brett's point too is like, again, I want to kind of hone in on this message and going to be annoying about it. Like inside bar, hammer candle, like just know what's happening when you see these candles more so like, or learn
candle within a candle, consolidation. If you see two candles,
like these are pretty much stacked next to each other. right?
Yeah.
Like more almost close. It's pretty close. 15 might, no, 15, I don't see it. Nah, this is a bullish engulfing here. So that's another one I had to go over too, was bullish engulfing and bearish engulfing. I think that's pretty self-explanatory. Bullish engulfing, it's engulfed this, and Brett mentioned it before too, it's engulfing this red candle. The full body of this candle is engulfed by the other candles. So you know that bulls literally came in and said, hey, bears, you guys are that weak that not only did you only bring price down here, I'm going to take your lower price here and buy it all the way back up here, and to show that we have control of this move, you know? So bullish is literally engulfing this other candle here. So that's kind of a high level. I'm not going to go too far into those slides on candlesticks, because I know some people didn't join last week, Brett, for support and resistance. And I think it ties in great to what we're talking about.
Yeah.
So I'm just going to quickly do like, does everyone know what support and resistance is? You could say no, it's fine. If no one says no, I'm going to assume everyone knows what it is.
All about price history, guys. You know, you got to look back on the chart and see where sellers are selling and where buyers are buying.
Yeah, exactly that. So support and resistance, I would look at it this way. Well, it happens on multiple time frames. The time frame, like I would say, look at it as kind of you're starting from a bird's eye view, right? Say you're a pilot, or say you're looking at a telescope. I don't know. You're looking at freaking New York City. From far away, you can see the Empire State Building. And as you zoom closer and closer in, you see smaller buildings, right? Kind of look at it this way too with the market. You're starting on a higher time frame, for me at least, and for Brett with large caps. Even with Billy though, because Billy, I forgot what chart it was from today I sent levels on. I started at daily 4 hour, 1 hour, worked my way down to find levels. Like if you're looking at a 1 minute chart to find levels for SPY, I mean, can you find levels? Sure. But it's a lot easier if you go start on a weekly or a daily time frame and find levels. So the point of finding levels is to know for support. It's literally support. Support is an area where buyers have interest at, where the market could come back and potentially retest for a move higher, right? So that's support. Resistance is exactly that. Sellers are showing resistance and not letting you break through a certain level. So right now, resistance on SPY is at 660 or so, right? You can see how many times it came up around this level. We tested, rejected, right? So the rule of thumb generally with support and resistance is a level that acts as resistance at one point will likely act as support, and vice versa, right? So if we go back on this chart here, look, I just drew this level from this one part here, right? Let's just scroll over here, back further. This was support at one point, you see? It was resistance here back in August, acted as resistance here. But guess what? When we came back down and tested it in November, it acted as support. And how it generally works is when you break through that level, it takes multiple tests to break a level, especially on a higher time frame. Think of this way: a higher time frame has more strength than lower time frame. A 5-minute resistance or support level could break a lot easier than a daily. A daily is going to take multiple tests. So I want you to think of it this way: every time the market comes and tests these levels, it's grabbing the orders, limit orders here, right? That institutions have set here. And the more times it comes here and grabs and absorbs these orders, the weaker the level this level will get, right? And that's will give way that this level will crack. So let's use this right here, 660, right? This was tested here, reclaimed. It kind of broke through here, fake breakdown here. Like this level was tested multiple times. And then when it broke, look how strong the sell-off was. It was like the more this level is testing, it's collecting orders. There's only buyers or sellers in the market. So every time it's testing that level, it's absorbing orders there, right? And then on the flip side for resistance, the same thing. You need more buyers and sellers to break through a level for resistance. So tomorrow, if SPY is going to break through the 660 spot, you're going to have to keep testing here. So it might not break the level on the first test or the second test, but it's already had multiple tests here, right? So when you have multiple tests at that level, the level gets weaker because you're absorbing those orders, those sell orders. Buyers are coming here and reject. They absorb some orders. Do it again, absorb some orders. And then next thing you know, boom, we'll break through that spot, right? So support and resistance really is about coming to find levels where the market had showed for support that buyers had a level of interest, or resistance that sellers had a level of interest, right? So you look for rejections, and that's when the wicks come into play here too, right? Those long upper wicks are going to be your resistance points, and those long lower wicks help you find support. And again, it happens on every time frame. That's the thing about the market, guys. Everything happens on multiple time frames, whether it's daily, 4 hour, 1 hour. I'll explain to you guys on time frames at some point on what I like. I mean, for me, for finding swing trades and day trades, I think daily, 4 hour, 1 hour, 30-minute, I use those in progression that way. Those are super helpful. But for finding levels, you can do the same thing, right? So that was just a quick little toucher on support and resistance. I know like Dave and Randall, y'all weren't on the last call. Does that make sense to you guys how support and resistance works?
That does make sense, and thank you for explaining it like that.
Okay, got you. So Dave, like, so say for you, for example, right? Like last year, I told you getting Google and you sold it early, but it's all good. You made good money on it. But
I got a bunch in it.
that's good. But like if you're looking to get in a play like Google, you want to like say what was it? Earlier this week, Brett, we were talking about different names like 270, right? 270 was support level on Google, right? Mm-hmm. I said in the chat that actually, let me go back. I had those levels because of that. I don't know why I erased it. I showed it because of this. Google, look, we had a test back here on 270, right? Test here on 270, right? So in the low 270s, it's not always be exact to the penny, but I literally just said, hey, I have interest in Google with the low 270s. It bounced here once, twice. It didn't touch it for a while, likely a third time. Guess what, guys? The market's about probabilities. We don't know for sure it's going to bounce here, but you like your odds that for the third test here, this acted as a super strong support level. It's going to bounce again. And guess what it did? That was last week we mentioned this, from 271 to 305. Like if you played options on that, that's on a 2-week expiration, that's a 300% play right there, you know? So, and even if you're playing shares, that's a great return on that still. So that's why you want to look for those historical levels. Like Brett said, the market has a memory. Like the market remembers this 270 level as a important point. Randall, so you got your hand up.
So I understand the support part. You just touched on I think the other one was resistance, you said?
Yes, sir. So resistance.
See the trend in that.
The same concept, right? If I flip this chart upside down, if you went on did a headstand, you look at this chart upside down, the support level will be resistance and the resistance level will be support. So let's talk about resistance now, right? So now that Google bounced up this 270 I was looking at, right? And this is how you set targets. So the reason for support is to find levels where you're going to buy your stock, and resistance is to find levels where you're going to take profit at, right? Or look to start taking profit. So without even looking at hard, Randall, look how many tests we saw here at this 312 spot, right? Let's call it 312 to 313 or so, right? Look.
Yeah, I got it now because that's exactly what I was looking at.
Yeah.
All right. Yeah, it makes sense.
Okay, good. So you understood it pretty quickly. So that's pretty much the same concept, right? So the same thing now. If you're long Google, if you're in a long position on Google, and we come to this 312 to 313 spot, you might want to start taking profit there. Or if it's in your IRA, you're not going to really care. But if you're day trading or swing trading this, you're going to want to start taking profit around this level. Sure, it could break through and go right up, but like Brett and I and Billy always talk about, like trading is about having consistently repeatable systems, right? That when you hit major levels of support or resistance, you're going to buy it or you're going to sell it still, no matter what. Maybe say you have 100 shares of Google. You know what? Let me sell 75 of my shares up here. I'll leave 25 for runners. You know, it's about having repeatable systems where you're taking profits no matter what. Because say you choose not to take profits and the one time you don't, it tests here and then, I don't know, it rejects back it comes back down here again. That's money you're losing out on for no reason at all. You know, you could always re-enter the trade. The biggest thing with trading too is having a planned exit and entry before your trade. If you enter a trade with no plan to exit or no plan, if you just randomly enter a trade, that's a different story. But if you're entering a trade with no plan on where you're going to exit the trade at, you're really gambling, right? You're just leaving it up to chance. Oh, I'll see what happens. Like the market, like I said this before, me and Billy were talking, the market is a casino, right? When you go to play blackjack or you go to play roulette, those games have a definitive outcome, a definitive start and an end. When you play roulette, you drop the ball on the thing, say you're going for a number, your number hits or it doesn't. If your number doesn't hit, guess what? You bet $100, you lose $100, that's it. In the market, say you put $100 in Google, right? And Google goes down 50% and you continue to hold still, the market's not going to force you to get out of the trade. You're stuck in the trade for as long as you want to be. So that's why it's up to us as traders, investors, or whatever you consider yourself to have rules and parameters on how you're entering and exit trades. And part of that is using support and resistance levels. Because if you don't have that, you're essentially gambling, you know? So
I'd say we're the house in the casino, honestly.
what's up?
I'd say we're the house in the casino.
No, you are the house, right? You
Listen, I ain't
rules.
no fortune teller, but I'm telling you right now, our calls are pretty well on point. And all I do is I take every chart, I'll sit there for an hour on the same chart, and I will look at and analyze every support and resistance zone and look at price history on a stock. If you sit there and look at a chart long enough, you will eventually know the stock by the back of your hand, every support level, every resistance level, and you can be a millionaire off of one stock if you really want to,
Yeah, 100%.
So it's all about just being dedicated to certain names and
being disciplined too with
yes, yep.
Because like Brett said, we're the house, meaning we're the house in the casino that we make the rules. There's no blackjack table you go to that already has rules. You enter the market, there's numerous outcomes that can happen. It's all about probability statistics. Like so much can happen in the market that you're subject to whatever's happening on a screen unless you have your own set of rules that's protecting you from what's happening on the screen. So
guys, NBIS 125 tonight. 125. Let's go.
Huge breakout on that. Yep. Look, I don't remember when I drew this line, but look, it's rejecting the line that I drew. I don't remember when I drew it. But like that's how levels work. Like you could look, you could see it was rejecting here before. And look, it started rejecting the price area already. Like that's how simple it is, And like Brett said and Billy said, it takes screen time to get a feel for these things. So I would never be discouraged. Don't be discouraged. Like if you're looking like, oh crap, I can't find this level. And if you guys are doing your own charts for Billy's charts, my charts, or Brett's charts, and you're drawing up your own levels, feel free to go and ask like, hey, Jay, Brett, Billy, are you seeing support at this level too? Are you seeing resistance at this level too? You guys are 1000% welcome and encouraged to do that. That's the only
I'll take any questions. I'll answer any questions you guys got. Any ticker, any questions besides the shit coins. I don't do all the shit coins, but any tickers, any questions, I will answer as soon as I can.
Yeah, for sure.
Yeah, same thing, guys. I know I've helped quite a few on the side already, but yeah, I mean, I put a lot of time into this 2 a.m. I'm up at 6 a.m. It's not something you can just roll out of bed and then just execute, right? Before the market opens at 7 for pre-market, I'm drawing out levels for all you guys. So, when I list every single level and like list out those support levels, what happens is I want to see that price like retest those supports. What happens though if a support level breaks, that becomes your resistance level now. So if that price action isn't holding a certain level I list, like that's going to act as a new resistance, and price will go lower, and that'll become a new resistance level.
This is one of yours right here, Billy. HCAI from this morning. Like I don't trade Billy's charts. I don't trade small caps. Brett doesn't either. But if I ask Brett, I'm like, hey Brett, can you go find support resistance on HCAI? You could find it. Like that's literally like this morning. I was talking with someone about this stock. And I came in and said, okay, I see this resistance here in pre-market, right? This 3.3, whatever, 3.9, whatever spot. I'm like, let it come back down here. It's breaking out. This is testing highs over here. And look, it came back down, tested this level, and ran back out to 0.43. And this is why also too, I can see why Billy does a lot of in and out scalps. Because if you're going from here to here, why would you not take profit at this level? Why would you just hold back down to here and let it go again? You could, but why would you not take profit on this? You could re-enter the trade if you want, but like you can draw levels on any stock. So guys, I know Billy gives levels out every day on his stocks. In my opinion, if I were you guys, I would try to you could go and back test and learn, okay, Billy put 0.3, 0.2, or whatever supports he had, kind of back tested at night and get a feel for where he's getting his levels from and how he's coming up with them. So in the morning, when he puts out his list of his top 5 scans, you can go and throw your own levels on really quick too. I'm not saying you'll be able to do that tomorrow or even next week, but kind of make it a repetitive thing where, all right, you see Billy posted these levels, kind of backtrack how to get these. all right, let me go look at it tomorrow night and kind of see. You're almost doing your own level of back testing, you know, just to see where you're getting from. Billy's gonna tell you what stock to play anyway, but if you have the levels, it makes it even that much easier. Like imagine you were trading HCI today and you have these levels in front of you, with Billy telling you this is a good stock to play. How much easier does it get than that? You know. So it's important, like you said,
I'm literally
waking
giving
up
you
at 6 a.m. and doing your levels, you know.
I'm literally giving you guys like the secret formula. It's up to you to put the work in, go back test like Jay said, ask me questions why I drew out a level, right? And actually kind of opposite of what Jay said, like I actually start on a 1 day and then I'll start, looking from the bottom up. Because with these small caps, if you look back on like a 6 month or a 1 year, you can see where price action went previously, right? So if you're breaking out of like a 1 month zone or a 6 month zone, like AIXI was a freaking crazy play, right? You like to kind of go from smaller time frames to larger to actually see, all right, where's my range? Like how high can this go? And that's where I get a lot of my levels.
Do you guys understand
But
what that
I'm
means
literally-
where your range is? Sorry, I cut you off, Billy. Do you guys understand what that means when Billy says, where's his range?
It sounds like Billy started
No.
with a 1 day chart and then going to a week, a month, 3 month, 6 months sometimes.
So I think he's doing that. So I think, Billy, you're saying for your range, like your range is gonna be like, okay, we had a gap up. So first off, Justin, just something to consider too. If you're trading a gap up, this will be your range, whatever happened pre-market. So you have your low of the gap here that's your support for the gap, because you run the risk of filling the gap, obviously, if it comes back down under here. So the range really for Billy, you're you get on at 6:30 in the morning? What's your pre-market period? 6:30 to 9:30?
Something like that, or early.
Yeah. Yeah. So
Get up early.
does anyone, I put something in chat in trading strategies. That's something called initial balance, right? It's more so to use on large caps. You use it for Billy stocks too. But initial balance pretty much means that you're finding a range in the first hour of the market open from 9:30 to 10:30, and you're trading that range. Like you have the opening, you have the IB low, which is initial balance low. You have an IB high, which is initial balance high, right? All that is the finding a range the market is in, right? If you break out of that range, you're bullish. If you break below that range, you're bearish. Or if it's range bound and choppy, you play the lows and you play the highs of that range, right? So with Billy stocks, if Billy, you're trading from 6:30 in the morning to like you get on at 6:30, let's see, 6:30 here. Okay, got you. So you kind of use these levels from the stock open whenever Billy gets on, and you see like, okay, this is your range you're working with to start the day. By this time, 7 o'clock, you have more range here. But really from pre-market, our range was pretty wide established here from pre-market. If you went to 9:30, this was like the highs of the 9:30 range. But if you're just doing a pre-market, say before 9:30, you're on 7:30 with Billy, you have this first hour to work with or whatever from when the market opened, you know? So this is your range that's getting established here. And that's how I found those levels. That's your range, right? And Billy, I think you were saying, sorry, for 3 to 6 months out, are you finding levels further out for like further out or not really?
Yeah, I mean, I think you're right. All right, so you nailed it pretty much. Like my initial balance, like I like to find a range within that pre-market time frame first.
Mhm.
So say I get on at like 6:30, 7 o'clock. I like to look back to 4 a.m. to see where did that high sit of pre-market. You'll
So, right here.
always see me reference, you'll always see me reference pre-market high. And then I'll also look back at the previous day to say, hey, was this like an after hours runner from the day before?
Mhm.
That can act like as another resistance level. So for AIXI, that after hours high yesterday was $1. So that was your resistance level from yesterday. So that was a big support level today, because if that dollar broke and held that action, that's going to become a support level, and that's exactly what we saw. It ran from like $1 to 271 on a nonstop uptrend today when that price action held. So, but yeah, I'm always looking at different ranges. I like to see where we start in pre-market, if it's an after hours play. And if you start breaking pre-market highs, I like to look further out then. Like, what did this do on a 5-day chart? What did it do on a 10, a 20-day? And then someone's alarm's going off. What the fuck?
Right.
Damn. Jay.
But yeah, I'm always looking back to say, where can this potentially go? Where did
Well,
this
look-
go 5 days ago, 10 days ago, 20? And if this
So,
starts
like-
breaking those resistances, yeah, go ahead.
No, I'm saying to your point, Billy, like this is September levels, right? So I'm sure when you're looking at a level to clear, this came to September levels, and then after you're like, oh crap, we're clearing September levels, I had to go further back. Now you're looking at July, and you're looking at early July. Look how high
Exactly.
up you
So
went.
you keep going back.
Yeah.
You keep going back to historical price points and seeing, all right, where did that price stall out last time? Where did it have support last time? Because once you start clearing all these resistance levels, what happens? They become support levels. And then they're like building blocks, right? As soon as you break one resistance level, guess what? You're going to look for the next resistance level. Or vice versa. If you start tumbling through a support level, where is the price going to go next? Where's the next support level?
Yeah.
So that's why, like I always say, entries and exits are always based on support and resistance. Any trade in between is a bad trade. You have to play off your key levels.
Yep.
You have to have a plan. You have to have a
Otherwise, you're guessing.
strategy.
You're guessing otherwise. Like, wait till your level to come
Yeah.
around.
Otherwise, you might as well just throw your fucking money in a slot machine or play lotto. Like, this is super calculated, and that's why we're all hitting the way we do, because it's all about reading the charts, reading about price history, and when you couple that with like volume and candlesticks, like it tells a whole story, which we'll put together for you guys eventually.
Just to be clear too, what Billy was saying, I think it was Justin. So yes, go back days, months before, but that's after you start clearing those initial resistances, and you're looking to find initial more resistance levels that you'd be hitting as your next targets, right? You're looking for more targets. But as far as your entry, what Billy is saying he's doing is he's looking at his pre-market levels. So starting at 4 a.m., he's seeing where the high is, the lows, and drawing levels based off of that. So that's how you're going to determine your entry. For your exit, obviously, for a name like this, you have a lot of levels to work with now. But say it was on Thursday or even Monday, you didn't have all these upside levels to work with. So that's why Billy's saying, all right, now, like this was where we were at on Monday, right? On Monday, you didn't have this huge, massive candle. You had to go back way further than November to see what the next targets were. So that's why Billy's saying that you go back further for those other upside targets. Justin, that makes sense?
Yeah, that definitely helped. I think I still need to understand more deeply what initial balance low or high is, but I could Google that. The way you guys
I have
explained
something
it,
in the
it makes
chat too
sense.
that could, And I think I would point out that like the way Billy does it, it might be a little different for like, it's the same concept, just a different time frame, right? So Billy, I'll let you, you said, I think I'm sure you're going more on Thursday, but I think you said like you'll start at 4 in the morning and kind of draw up those initial levels. So Justin, say you wake up tomorrow at 6:30 in the morning, right? And you're like, all right, I'm going to go follow Billy's trades. The market's only going to have so much data that was pre-market to give you. Those are your initial range you want to use to get an idea for your entries on a play of Billy's.
Exactly. So like Jay uses an initial balance period of 9:30 to 10:30. And correct me if I'm wrong, Jay, but he uses that first hour after the market opens to like set his ranges.
Yeah.
I use from 4:30 to like 6:30. Because when the market opens for pre-market trading at 7 on Thinkorswim, I have all my levels set out. And depending on how price reacts to those levels, that's how I take entry. So again, pre-market action is very limited. You have a couple hours there. So what happens is I'll look back previous day, previous week, previous month, previous 6 months, previous year. And if you start clearing those pre-market highs, then I look at a larger time frame to dictate, hey, where can that potentially go? Because the sky's the limit. Once you start breaking pre-market highs, you're going to be like, all right, what's next? So as a trader, you have to look back on previous time frames and say, all right, there was a period of consolidation at like 50 cents, and then 6 months ago there was a consolidation period at 60 cents, 70 cents, 80 cents, etc. So I'm gonna really go, candlestick by candlestick, as crazy as it sounds on Thursday, to really give you guys exactly my mindset as a trader through it all. And once you really understand, it's going to start clicking on all cylinders for you guys. How we kind of take it. And I'm going to do this often and really just get you guys to understand how it works.
Yeah.
It's like my
Billy's point, I'm
commitment
going
to you
to look
guys.
into like one education session per week at least. And then I know I think what Billy does is very special. So Billy, I think you deserve a day for your small caps. People have a lot of questions on those. Like I have ideas of what you do, but I'm not the one going to find those plays and making them happen in real time like you. So that's your specialty, man. Does anyone have any other questions on like candlesticks, support and resistance? I know we've been on for over an hour already. I don't want to throw so much info at you guys. This session's recorded, so you go back and watch it, ask questions in the chat, take a day or two to digest the information we presented. But does anyone have any questions on anything tonight or anything from technical analysis in general that we could help with?
Oh,
Yeah, could I ask you like an unfair question in a sense?
Of course.
To make this a tangible, like obviously I'm learning a lot. To make it tangible, do you suggest, hey, you know what, just for the next week or so, just look at SPY or look at NVIDIA and you practice candles there?
Yeah,
Candles and resistance there, like just to take a look at like, all right, hey, like maybe don't look at 50 different tickers. Look at 5 and just like go off that. If that makes sense.
100%. No, that's a great question, Dave. So I think it's important to like, so how I got better with charting is just charting SPY, right? Because SPY is the most liquid name you could chart, right? So if anyone doesn't know, SPY is the S&P 500, it's the ETF. So it's the entire S&P 500 reflected in the ETF, which is the SPY. So it's the heaviest weighted companies in the world, basically, right? So that's a very liquid name. So Dave, yes, I would say, you know what, Dave, if you want to practice this yourself tomorrow morning or just tonight, like go look at SPY and be like, you know what, just go daily, keep it simple. Let me look at some daily levels at like, okay, I know that we might need to clear a 660 tomorrow. Let me draw some resistance level here. And when you're doing this, you don't want to have 100 different levels that you're doing and your levels are bunched up like this. Like, you know what I mean? You don't want to go and draw every support and resistance line, just ones that are meaningful where you see a rejection or a bounce at, right? Because the lines have to mean something to you where it's going to be something actionable where you could trade based off of it, whether you get to enter or exit a trade based off that. If you have 25 lines stacked next to each other in the same range here, that means nothing for you. So I would say use SPY. If you like tech names, use QQQ.
Everyone that owns any stock, I mean, besides Billy, I mean, anyone that owns stock should be watching the SPY, Qs, and Dow, bro. I mean, those are a given. You know, those create pressure to buy side or sell side and can ruin your chart at any time. So these are the most important to any chart in the market. You know, you have to make sure that the indexes are going on your trend. You know, you don't want to buy a chart that's starting to look like a bottom, but the indexes look like a top because your chart's going to get ruined.
Like Walmart's a good example. Like pre-market, Walmart looked great. And I was like, it was literally like, okay, put this to the side here. We were filling out a flag over a key demand level right here, right? I'm like, all right, cool. But then guess what? The market was pulling back. And that's why I was like, oh, you know what? Forget that trade idea. Because like Brett said, your setup could look great, but if the market's pulling back, the market doesn't give a damn about Walmart, NVIDIA, whatever setup you have. SPY and QQQ are controlling the overall direction of the market.
Your Walmart shares are in the SPY. So when the SPY sells off, they're selling your shares.
Guess what? It did this too. So it's something you have to pay attention to. So Dave, if you're trying to make something actionable, tangible for yourself, an assignment I would say for you or anyone else who's trying to learn is go ahead on the SPY. I would start finding levels on a daily 4-hour, 1-hour time frame. You know, start there and see what you can find on the chart. You know, and then what I would say to do from there is go back every day and watch how the market responds to your levels. You know, because then you'll see like, oh crap, wait, I missed this level. Oh, now I get this, you know? So kind of make it as a practice point for yourself. If you guys need recommended brokers to use or charting platforms, TradingView's great. Thinkorswim, if you have an account, they have amazing charts and it's free.
Yeah, so, Dave, if you have any questions, let me know. I mean, that's why I post the indexes every night for you guys. You know, I tell you the general.
Brett's going to post the Dow, Brett, me and you were like
every index.
Me and Brett are going to talk about similar things if you guys can't tell. Like I was busting your chops about MBIS because we were both talking about it, but we're looking at pretty much similar things. So, Dave, does that answer your question as far as where you should look or what to do for yourself?
Yeah, I appreciate that. Yeah, because that's how I ingest information. It's kind of like, this is going to sound maybe stupid, but you can watch videos all day on how to throw a football, but you don't know until you pick up the bloody thing and throw it.
100%.
So,
it's trial and error, my dude. You have to have experience to learn it.
Yeah, and Dave, another thing you can
do
that's
a great point.
Nope.
No, sorry, Bill. I'll just say, I would say what you could do too is whatever charting platform you're using. I know obviously people are working and you don't want to sit here and watch all day. You can set alerts on prices, right? So like say here, if SPY's gonna break this level, I can just add a little alert here. And when it hits this level, I'll get an alert. So maybe like when your alert triggers for a key level you had, you go looking like, oh crap, look, it's bouncing a level I drew off. And that kind of helps instill confidence that you know how to chart. And like, that's how you build those repetitions, maybe without putting real money on the line right away for it, but to kind of get comfortable with it for yourself. Yeah, sorry.
That's a excellent point, Jay, because like something like AIXI,
Mhm.
pre-market, it didn't really have that action, right? But when you set those levels, like say I put $1.10, $20, $30, and you know, you're not watching it at open, but then you're starting to get these alerts, like, oh shit, this is gonna start running now. That's what happens. Like they'll distract you, you know, with you know, they'll throw some stuff, different plays that will make you not look at AIXI,
Or
and
they'll
then
lull
they'll
you to
start running.
sleep, they'll chop around and nothing will happen. And then all of a sudden, level will hit.
And just like that afternoon hold, right? When you went from $1.50 to 270, if you set those alerts on your phone, you know, it'll alert you and you're like, oh crap, like this is starting to break, you know, these key levels at 12:30 just randomly. And then you start paying attention to it again. So always make sure you guys set those alerts on your brokerage.
For sure. Justin and Carl, I think you guys are off from you. I don't know if you had any questions in particular.
No, that was great. I think I was going to ask what you would do if your support begins to break, how far to set your stop losses, but I think that's something that I believe Billy will cover more on Thursday.
Yeah, I think it depends
That's a
on what
tough
you're
question.
doing. Yeah, it
Yeah,
depends
that's a
what
tough
you're
question.
doing. It depends how you're trading it. So it's a lot of it's a loaded question, I would say. You know, because I think one thing Brett, Billy, and I always talk about is failed breakouts and failed breakdowns, right? So say I know this is kind of after hours move. This looks like it's a failed breakdown under a key level, but it looks like it's a breakdown happening. It's a failed breakdown. Look at the wick here, you know? So like say your stop loss is at 660 here, just using an example, like you would have had a few points of loss here and you would have got stopped out of the trade, you know? So it really depends on what time frame you're trading on, what you're trading.
I also
Meaning,
look when you get breakdowns, I also look for your support to turn into resistance. So now if you
Yeah.
have that same support level turning into a point where the stock can't go above, where it turns into a resistance, that is your clear given that you're stuck in a downtrend and that you're going lower. That's my point of inflection. You know, so
yeah, for sure.
Yeah, Justin, like who asked the question? It was Justin,
No,
right?
I saw Carl from you too. I want to make sure Carl didn't have any question. Carl, I don't know if you had a question before.
Yeah, I was just going to ask this really quick. It kind of tied
Yeah.
into what we were just talking about before. But so how would you guys say you determine how much you allow yourselves to be exposed on each individual trade that you do? Or is it kind of, you know what I'm saying? Like, is it kind of more based on that
Um,
individual stock amount, how much you allow yourself to get exposed on it, you know?
So there's multiple ways to look at that. I think of, like Brett said, one point Brett made before is when you trade the same stocks over and over again, you kind of get to know the stock. So there's something called ATR, average true range, right? So say something like Tesla has a higher ATR than, I don't know, a less volatile stock like Walmart, you know? So maybe on Tesla, you might want to give yourself 10 points of breathing room versus on Walmart where you know you only need 3 or 5 points of breathing room before it really breaks down, you know? So there's a lot of factors to say I would consider in that. If you're trading
and
options,
also
you
your
got to keep tighter
confidence in a play.
stops.
Sorry,
Yes.
Jay. Also your
No, go ahead.
confidence in a play.
Yeah.
You know,
Yeah.
a lot of people don't have patience for a play to play out. Like a name like Tesla, we all know here in this room that Tesla long term will probably go to $1,000 again. We all know that. You know, you could be holding it probably for 10 years, but it's a matter of you want to make your best opportunities in a small amount of time. So we're looking for trends and direction. You know, that's why a lot of people set stop losses. I personally don't set a lot of stop losses because market makers know exactly where to kick you out, you know. So I don't know how Jay, do you use stop losses?
Mental, like I'll know where I want to get out of a trade at. If I'm trading so what options, I have to be very precise, right? So say, I think to Brett's point too is how confident you are in a trade. So say we were talking about on NQ, right? I was kind of like pounding the table on this idea that we're going to see a bounce at the monthly mean, which like, guys, like you can't ask for much more than that. I'll cover mean reversions in another lesson again for you guys. You missed it from last week, but this yellow line right here is the 21 EMA. We'll revisit EMAs. I said that a monthly mean reversion was taking place last month on March. Look, we're almost engulfing last month's candle already, right? So that was like a high confidence play. Like if you were going to swing calls there or something like that, you could scale into that, but buy some time on it. So I guess, Carl, that is still such a hard question to answer because it varies on so many for so many different reasons. Where if you're playing options, you're playing futures. If you're playing, like say Brett, you're just accumulating shares, something like Nail. Like if you stop yourself out now, you'd probably slap yourself because like there's no reason.
People get upset when I have good plays that go down. I cheer. I want to buy as many shares as I can. You know, people should be happy for these discounts. This is opportunity. You know, you're not getting opportunity buying Tesla at 500. I'll tell you that. You know,
No.
Now at 340. You know, now we're talking some good opportunity. You know. So you should be happy about these moments. You don't get these moments often, you know. Trump's giving it right on a platter. It's the same tariff dialogue as last year. I mean, he's giving you discounts right on the table. You take them or leave them. It's up to you.
Yeah.
See, that's where I'm at right now too, is just because the only thing I've really held is Tesla, and my cost average was 350. So I have like 8K that's just been sitting in Tesla right now. So
and did you hold it? Did you hold it to 500?
Probably. Well, I sold some for sure. I probably made like 10 grand off of Tesla, but I'm just saying I've kept that 8K for probably like a year or so now. I don't even know how long it's been.
You probably could have made a lot more elsewhere.
Yeah, you got to ask yourself too. What's your goal? What's your goal? Is your goal to like retire for Tesla shares, or your goal to make money in the short term?
Just make additional money. I mean, I just had so much going on. It's kind of just when I catch or pay attention, really. But now I'm looking to really get into it. So for me, I'm trying to like understand if it's worth me selling like say like half of my Tesla and just using it to daily trade and like
don't sell down here.
I would not be selling Tesla down here.
That's the tough part because I want to learn and be able to jump in on trades and everything.
Tesla's gonna bounce. I mean, it's already bouncing. Look at like this lower daily band here. It's gonna bounce tomorrow. It's gonna retest. Tesla probably is going to end up retesting 376.
Carl, you're at the low of the range.
Yeah.
Tesla can easily go back to 500. I'm telling you right now, you're going to kick yourself for selling Tesla right now.
I know, but for me too, the one thing I'm curious about is like, I almost feel like I should sell some of it just to be able to learn and like get used to like the habit of this daily. You know,
I get it, but once it pops a little, then sell it. You know, once it gets closer to 400, sell it.
Yeah, I got finals and stuff for the next 2 weeks anyway, so I'm not even.
Yeah, well, Carl, here, sell at 3. If you really want to sell at a good point, this is your spot right here, 376, right around here. This daily mean here. If you want to, if it goes to 400 after, don't be mad at me.
I know what Carl wants to do. He wants to sell his Tesla shares and play Billy Plays.
No, I just want to learn.
Yeah. I don't blame you.
I have 2 weeks like of complete freedom and about a week and a half, so I want to be able to like. Be on calls with you guys and be able to jump in and like learn. So I want to have funds to do that, but that's all I really have is Tesla.
Dude, if you're gonna play Billy's Plays, I'm not gonna lie to you. If I was new to the market, I would start with 500 or $1,000 in Billy's Plays. I'm not saying anything's wrong with Billy's Plays. It's just like super volatile, and I think kind of like when I showed you guys when I took with options when I was really getting into the options game and I ran that account up from like $5,000 to like 40K, like that was off of like practicing trading the right way. And I think what a smaller account balance allows you to do is trade the right way. I mean, Brett, we know people who have ran a balance up, ran an account up huge, but they never practice real risk management and go through those drawdown periods. Or
they blow it all.
They blow it up. Fast money is never what you want in this market because you will.
They all lose. They all lose. Fast money.
I've ran accounts up fast and lost it, but like when you really focus on the process, the old term is process over profits. It sounds super corny, but it's super true. Like when you focus on a process of trading the right way, the money will naturally follow you. It's simple as that. If you're focused on making quick money, you're going to lose it even faster than you got it. So I would say like, if you're going to mess with Billy's Plays, sure, they're a higher risk, but there's a science to what he's doing. Right. So one thing we were talking about too, like I don't really show profits like that, or I trade different things all the time. I trade futures and stuff, but I think a reason I want to do that is to show that like, everyone has a different account size. Whether your account size is $1,000, $10,000, $100,000, $1 million, whatever you're doing to make money at that level, it doesn't matter. Trading is the most scalable business possible, right? There's no other business in the world where you could start with $1,000, go to 10,000, scale to 100,000, and like the thing you're doing to get it there is the same thing. If you Walmart, Walmart, do you think Walmart did the same thing they did from the beginning to scale it to being one of the biggest retailers in the world today? No. Apple, all these major companies, they don't do that. But trading is literally your own business. You can scale based off your own diligence and learning how to trade the right way, take profits, have set rules, and be disciplined. You can scale it. That's why I'm saying, like, start smaller. It doesn't matter. Like, sure, it's human psychology, it's human nature. We all want to take money, and sure, I'd love to put freaking $1,000 into Billy's play that ran 1,000% and make 10 G's. I would love that. But also, guess what could happen too? You could drop that $1,000 in and just lose $1,000, and then put another 1,000 in tomorrow. But like, you know what? Let me try again and lose another 1,000. Before you know, you're down 10 G's instead of being up $500 on his one play that you could have took 50%
And
on.
Carl, his plays, you cannot look away from your phone. I'm telling you right now,
Yes.
dude. You've got to watch it second by second, tick by tick.
Yeah,
There's
I
no-
wasn't even thinking of anyone's plays in particularly. Just, like I said, just trying to be more involved. That's
Yeah,
like
that goes for all plays day trading, bro. That goes for Billy's plays, my plays, anyone. Like, it's just about applying a process to it and not being focused on like money. But Carl, I get your point. You want to have funds freed up so you can practice day trading, which I get. Dude, start small. There's no shame in starting small. That's how you have to start trading.
Yeah, that's why I was asking if you guys had like almost like a unit based thing. Like, in gambling, people will say like, oh, I, gamble this play with a unit, this with a half. Like, that's what I was kind of curious about, like a percentage base that you guys allow yourself to use for individual trades.
So I wouldn't say that. No, I wouldn't base off percentage. Based off your chart. You don't trade never trade your P&L. You trade the chart, right? Because you could be down $100,000 in a play if you're size heavy, but you didn't break a resistance level yet or break a support level yet, Or you could be down $1,000 in a play and you sized more than you should have, and it's working in your favor. So don't base it off don't be a P&L trader, be your chart trader. That's what I would say, right? Base it off of levels on a chart. So there's no set unit like, oh, risk unit like where you're gambling. Like, no, Tesla, say I went to long Tesla today. Tesla, if it breaks below 337.50, I'm out of the trade. That's how you define risk with trades. Based off a chart, not off a P&L or a risk unit or something like that,
Okay. And patience, guys. It really requires. I've been down over 6 figures on every trade that I've made $1 million on. Straight up. You don't be discouraged. If you're down when you first buy the stock, as long as you know your ranges and your support levels, you're golden. I'm telling you, have confidence. These market makers love to shake people out. They know what me, Jay, Billy. They know what everyone's looking at. They ain't stupid.
And they still fake us out sometimes too. We're not immune to it. It happens to everyone. Like, it's just part of the game.
Yep.
So that pretty much covers what I wanted to cover with everyone. I know we went through a lot. Does anyone have any other remaining questions before we drop off? Or if you guys do have anything you want to see for our next session? So like I said, Thursday, Billy's going to cover more small cap stuff. Next week, I'll do another education session. I'll go over some more of these things as well with you guys. Anyone have any other questions, comments, or anything like that?
No, that was great. Thanks for breaking it down, boys.
Awesome call. Thanks.
Appreciate y'all joining. It's really been, honestly,
great job.
Thank you. I just want to say thank you to everyone too for joining too. Me, Brett, Billy. We started off, as everyone knows, with a different group. We just started this a week and a half ago, and to have 13, 15 people here, whatever we had, it's awesome to see. So we appreciate everyone joining, listening in, asking questions. We take pride in doing these things. So I love contributing and answering your guys' questions and helping you all grow. It helps me too. I'm sure, Brett, when you get asked these questions to test your knowledge too. So it's kind of like iron sharpens iron with that, So keep asking questions. We're here to help.
I love to see so many people getting involved with the market, because honestly, this is where the money's at, guys. Like this people live off this for, people retire off this trading, So, starting young is huge opportunity to learn. 10 years into the market, you're going to know every ticker, know every sector, know every seasonality of the market. You learn these things as you watch the market all year round. You start to learn. It becomes nature of habit. So as long as you guys stay up to date with the market every day, watch us chat about it, but in 10 years from now, we're all going to be in the same place. We're all going to be very knowledgeable and try to master the market. Everyone's going to do well here. So.
Absolutely. All right, guys. Thank you all. Appreciate it. We'll be in chat this week, and we'll talk again soon.
Thanks, guys.